Good morning, everybody. Welcome back to the Opportunistic Trader. We're now joined by Dale Pinkert of Forex Analytics. Dale's been trading in the markets for well over 20, 30 years now. A lot of experience in the futures, foreign exchange world, and interviews a lot of traders. So a lot of great information from speaking to other traders for many decades now. Dale, how are you? Welcome to the Opportunistic Trader.
Thanks for the invite, Mike. I've been interviewing traders, analysts, educators. I'd say probably the last 4 or 5 years, done about 1,000 interviews.
That's
I think I'm losing my voice today from all of that. But yes, always found it interesting to uh, interview people because I was on the other side of the mic for a long time. And if you've done that, then you know what kind of questions to ask, what people want to know is usually what you want to know. And to pull content out of people and have them share their ideas is just another part of my intelligence gathering process.
Well, take us through that. If you can give us, your background. I know you started trading futures a long time ago. Give me a little bit about what you started trading and when you were trading it.
Well, actually, I started off as a runner on the old CME floor when they were trading currencies on the chalkboard, the old IMM under Union Station. I don't know what it is now, but really was an advantage up until about 10, 15 years ago for people that wanted to learn the business, to work on an exchange floor. You had a sense of community. You could talk to people that were successful. One of my teachings is surround yourself with traders that are better than you. And if you're just breaking into the business, that's not going to be hard to find, especially, at the CME or the old CBOT when they were separate exchanges. You really learned from masters. Although there was, I'd say, once open outcry went away, a lot of guys in the pit that were very successful really didn't know how to trade directionally. They had the paper to trade against, and it was kind of a feel in the pit than it was, the way we swing trade and everything since the internet age.
Well, take me through that. I was going to ask that later on, but we're there right now. So, how has the market changed from 20 years ago, 10 years ago to where we are now? And you speak with all these traders that are trading electronically now. Like, what's the experience different from 2010 and now?
Well, the difference is everyone's doing it from their home office, or they have an office and they're isolated instead of open outcry. I still think a lot of the same things happen. My Twitter handle where people could follow me is at Forex Stop Hunter. So I noticed when I was running on the floor, okay, I was a runner, the lower end of the cash system, and I would take orders into the pit during open outcry days, that people were very interested, the brokers, the filling brokers, the locals, in any order that had STP at the end of it. So I began to notice where there were blocks of stops that when they were elected, there was usually, even you could feel the volume and the intensity of the pit rise, roar, sometimes fast market would be declared where they're not held to a price to fill. And also notice that after that burst of price, emotion, everything else, at times it turned out to be a high, a low of the day, and at times even more significant turning points once they took the stops out. And back then it was probably the locals, getting long before underneath buy stops, looking for them to be elected and sell into. Today it's algos. So, I still think stop hunts happen, only they're silent now.
Interesting. So it's just a different form of the same sort of things and different players involved in different ways.
Yeah, well, I teach people that, they go, Dale, well, like you'd say you're a stop hunter. How do you know where the stops are? And I'll say, well, why don't you just look at any price chart and imagine either you're long or short, where would you put your stop? And most people look at the previous swing high, swing low, and that's where their stop. I go, that's where everyone's is. Okay. So it's not a, it's no big secret to figure out where the stops are. You just look for those significant highs, lows, and that's where people are going to throw in the towel. But I'd say one of the biggest frustrations for traders is being right about the market, wrong about the trade, and that's because they're using too much leverage or not letting their trades breathe, and they're putting their stops where everyone else is. So you may have noticed, Michael, in your career that there are many times the market will run resistance or support level where people have stops, and maybe for, depending upon the instrument, a few points, or in currencies, 10, 15 pips. And people initially are relieved, okay, well, I'm out next, or they're in a fetal position, depending upon the kind of psychology that they have when they come into the market. I say, don't make the markets challenging, challenge the markets. So you really want to give your stops tolerance over those levels that most people have, in currency, maybe 25, 30 pips, just in case all it is a run for liquidity and what I call stop hunt, and usually fake out breakouts and things like that.
Yeah. So you've interviewed tons of traders over the past few years, all different asset classes, all different strategies, systematic, discretionary, short-term, long-term, all the different strategies. Tell me about some of the experiences and what you've learned from talking to so many traders.
Well, I do have kind of a standard question, especially the first time I interview people. I have some people that I'll talk to several times a year and bring on the show. But one of the questions is, and one of the reasons I ask it is all the unrealistic expectations that people have when they first want to become a trader. And I asked people how long it took them before they started trading consistently. And not everyone has drawdowns, but when they made their breakthrough to, know that they, generally can be successful trading. And the answer I got from the average answer is about 4 years. So when you think about it, a lot of people think they could come in, take a course, just hang out on Twitter and be a successful trader. And, it's almost like, why should it be any different than at least an undergrad degree at college? Or even if you go into the trades as a plumber or carpenter, everyone starts off as an apprentice, then a journeyman, and then a master. So I try and give people realistic expectations so they learn to be patient with themselves, not just the market, that it's going to take time. And that time is screen time. You can't learn experience. It only happens with the passing of time.
Yeah, I mean, we stress that as well on the site. Larry and a lot of other traders that we have talk about, Larry's been trading for over 30 years and, was very, very active in options. And it's not something you can learn in 2 months, 4 months, 6 months. It's a sort of thing that takes years. And, you got to
Exactly.
experience all different market environments, volatility, see, how the market reacts. And, even getting back to what you were saying before, I guess initially of, while the market has changed, a lot of the price action is similar, and it's different sort of people moving the market, but it's just setting price action and being around for all different price activity.
Uh, yeah, that's very true. And the screen time, okay, beginning to recognize things. It's one thing to, have a successful trade. What's more important is knowing the whys. So when I'm mentoring people, I do it on Saturdays. I want them to know why a forecast or a trade or an entry or an exit. What are the reasons behind it? Because if you don't learn the reasons behind it, you can't repeat it. So, a lot of people are just too lazy to learn how to be a self-directed trader, because you know what? A lot of people out there, Mike, they're saying, hey, I'll sell you the secret to trading for $1,999. And then you'll have the secret. Well, the secret is there is no secret.
Hmm.
The secret is discipline and perseverance. And that's a secret, and hard work. So that scares off a lot of people, and that's why there are a lot of signal services, because people just want the money to drop into their account. That's fine. Know thyself. But if you want to learn how to be a trader, be prepared to make the commitment of riding a roller coaster, and that it's going to take time, and there is no secret or holy grail. There are many ways to skin a cat trading.
Well, that's exactly it. There are a number of ways to skin a cat, and it comes from experience. And so, from speaking with all the traders that you have recently, is there one strategy that kind of stands out, or that seems like it's really been working better than other sort of strategies from just speaking and analyzing traders?
Well, we have a very strong team. Someone covers Elliott, someone covers harmonics, and we have our basic technicals. Also have candlestick analysis and macro. I can't really say that it's any one style, because it's a practitioner of the style. Okay, so you can, Elliott wave guys have so many different interpretations, alternate counts, and so forth. What I like when I look at different methods is when there's confluence using different methods, harmonic pattern lining up with an Elliott wave count, and maybe something I'm seeing like a 3-drive pattern with RSI divergence under 70 setting up a turning point. That to me is the advantage of intelligence gathering. And so it's not a style, it's more of the person, more of the trader than the method. So, there are competent doctors and incompetent doctors. So it's the same in any other trading methodology as well.
Yeah. What
In
sort
my
of
view.
what sort of strategies, or not necessarily strategies, but mistakes do you hear most often made from traders that you're speaking to?
Well, early on, it's too much leverage. All right, baseball season just ended, but the biggest home run hitters are the biggest strikeout kings. The difference is they can strike out and have another at bat, either in the same game or the next game. Here, it's a one mistake business, and if you blow up, you can't trade. So really, the difference between pros and amateurs are pros know how to lose. So they have money left to be right with. So that's the biggest mistake most people make at the beginning, is they're trying to get rich overnight. I try and provide realistic expectations, and tell people that hedge fund managers do cartwheels doing 25% a year. So, there is a lot of unrealistic hype on the net of, 4-figure returns, 1,000% returns, 400% returns. But the most successful traders I know grind it out. And they're not trying to, every trade is just another trade.
Yeah.
So, but I would say after that, one of the frustrating things is something we talked about before is, you're bearish Amazon, but you chased it, and you had too much leverage or margin on instead, or whatever, and the market moves against you, and your stop gets picked off, and then the market moves in your direction. For me personally, I'm much better at entries in the market, and I've had to learn. I always had a problem with, in fact, many years ago, trader said to me, Dale, why do you write down your objectives and targets? You never stay with the trade till then. And 90% of them are, manifest. So I teach people to take partial profits now. And, we all need to ring the register. It's not a profit till we do, but, take a piece off and then you trail your stop, and you're in a win-win situation. You're still there. Let's face it, we always have too much on when we're wrong, or it feels that way. And we never have enough on when we're right, because it feels that way.
Right.
So, if you take partial profits on something, Michael, market keeps going, you're there. The market retraces, and you still believe in the trade. You're recommitting to the trade with profits rather than principal. So money management technique. No rocket science there. Just, you have 20, 30 pips in your favor. You go the door on half and trail your stop to BE, and you have a stressless trade. That's also something important because, I've been doing this for a while, since the mid 70s. Okay. So it's not an easy life. So if you can generate a style, or some people, put it on automatic pilot to make it as least stressful as possible, you're going to have more longevity as a trader than every trade being life or death to you.
Yeah. Well, all that makes sense. That's a lot of good information. What about more recently with the rise of systematic trading, high frequency trading? Um, do you think a discretionary trader uh, uh, has an advantage, or do you think you got to be systematic these days?
Well, in my youth, I used to say systems are for people who don't know how to trade.
Hmm.
Okay. My belief system has changed a bit. I see the advantages of it. Uh, Tough to teach an old dog new tricks. Came into as a discretionary trader. I'll go out that way. That's the art of it. Uh, and I also think that the black boxes have distorted some of the markets, and the markets have become too reliant on them. They're too much of the process. I think that things changed when we went from fractions to digits in stock because you took the incentive away from market makers. So I think the market structure is different, and machines do have tremendous influence on these markets. So you have to be aware of them. But a chart is a chart is a chart, and the only difference is beta and leverage. So it's not the vehicle. Again, it's who's driving it.
Yeah. So it's not the vehicle, it's who's driving. So you think basically you can succeed on either side. Do you think that's the sort of thing that even a discretionary trader should have a systematic approach to the markets?
Yeah, I think that you should, systematic. You should have a disciplined approach. I like that a little better. System kind of implies taking the human element out of it. But you could be a discretionary trader with a disciplined set of trading rules to follow that work for you. So, yeah, you never go into a trade unless you know why. What's the contingency that's compelling me to take risk? Therefore, if that contingency is negated, you shouldn't be in the trade because that's what got you in the trade. So there you're able to measure your risk. And then you should also have an idea of what the potential for the trade is. So you have your R&R, risk reward. And if you can't answer all of those questions, put your mouse in a wall safe.
Um, what are your thoughts on the markets here? I know you pay most attention to the currencies. Is there a strong view at the moment?
Well, I was pretty bearish equities. I like trading, because I'm busy running a business and doing a show. So I still do trade currencies, but I found that bearish 3-time ETFs and bullish ETFs suited me because, you can't be perfect. And I was able to handle the noise better in those, like SQQQ and TZA. So I was bearish up there in the NASDAQ and the S&P, but I used to always feel like I had to have a view or an opinion. And right now it's an I don't know. I know a lot of people are looking for a washout under the Feb lows in the market. I'm not so sure that's going to happen in the S&Ps. maybe in the NASDAQ, we could take those lows out. I think that people, I use this metaphor, and this is also very important because, I don't always do it correctly. For example, today I was looking for a respite in the dollar rally, and I would have been better off being long euro than short Swiss. Okay, it had a better payday, but I use the American Idol analogy. So for singers in a competition, their most important decision is their song choice. Does the song fit their voice, and are they have the passion to deliver it and own the song? As traders, it's trade selection. And from being in the markets that you could be right about a general market direction, but you pick an issue that is not participating in a strong market, or get short something that's not dropping in a weak market. So trade selection is very important, and I think having an understanding of relative strength, relative weakness, and being able to identify that will help you with your trade selection on knowing that you want to buy breaks in the leaders and sell strength in the weak sisters. And that way, even if your timing isn't perfect, they're more forgiving because you've identified something that holds up better during declines, or something that doesn't participate in ideal conditions. So what happens if conditions reverse? So, identifying leadership and laggards, I think, is important for trade selection.
Yeah, that makes sense. What's
And that, that's not rocket science either, right? I mean, that goes all the way back to the old Investor Business Daily days where they did, relative strength rankings. And you could apply that in any asset class. I mean, you're going to find, which bonds are leading, which bonds are under pressure, like emerging markets or ours or the bonds. And you could do it in currencies. Is the euro acting better than cable? Euro pound will tell you which one you should be focusing on, the long and short side. So currency pairing kind of gives you an idea of where the leadership and the weaknesses.
Yeah, absolutely. I guess last question would be, other than risk management, is there some sort of technique, and what do you think is the most valuable technique that you try to teach people?
To be okay with missing trades, because we're paid to be patient. And impulse trading is the most important thing to avoid. And avoiding bad trades, Michael, is probably even more important than being in good trades. They don't show up in your P&L. So I tell people to write this down. I will miss trades every day, and it's okay because there's always another trade around the corner. And take the pressure off yourself. Also, don't expect perfection at the crap table. So, I do believe in a little bit of scale in trading and reduce leverage and let your trades breathe. Do not trade with very tight stops. If you're doing that, you're just going to get stopped out over and over again and have a counter erosion. So, use less leverage and let your trades breathe.
Yeah, a lot of valuable thoughts there in terms of the market will be here tomorrow. Even if you miss the trade, I guarantee
You're
there'll be
right.
another setup tomorrow and next week and the week after that.
And be happy with a winning trade. I mean, you'd be surprised, even pros. Oh, if I would have stayed another day, I left all this money on the table. If you can't be happy with a winning trade, how are you ever going to be happy in this business?
Hmm. That's a good point. That's a good point. A lot of great information. Hey, Dale Pinkert, I really appreciate you taking the time to speak with us. A lot of information about, from the value of speaking to a lot of other traders and just being around the markets for so many years. You can catch Dale at Forex Analytics. Dale Pinkert, I really appreciate it. Thank you very much.
Glad to serve, Michael. Nice to meet you. Say hi to Larry.
Will do.
And remember, don't just count your pips, count your blessings. Adios, buddy.